I heard a lot of people talking about taking profits, selling. There was some worried people about the drop. Gold had almost hit 4,400, and they're talking about that big drop, and maybe it's going lower, which, of course, is what happens in a bull market. You get these violent sell-offs to scare people out. But the bottom line is gold's $4,000 an ounce. In fact, it closed the week almost right at $4,000 an ounce again. I think gold is forming a nice base here at 4,000. Silver, it's not, at 50, but it ain't much below it. It's around $48 and change. I mean, it's holding pretty steady, very close to $50. It's not tanking back down to 40. So I think, again, this is another opportunity, just like when silver was around 30, and I was saying 30 is the new 20. 50 is really the new 30. So according to Trump, we've got the greatest economy ever. Yet the people living in that great economy are almost as pessimistic as they've ever been about the economy.
The precious metals market saw renewed volatility this week as gold briefly touched $4,400 an ounce before retreating to around $4,000, forming what many analysts view as a strong support base. Silver also held firm near $48, staying close to the key $50 mark, suggesting resilience despite market corrections. With global inflation concerns, geopolitical uncertainty, and ongoing dollar weakness, both metals continue to attract investors seeking safety amid uncertain economic signals. In his latest commentary, Peter Schiff, CEO of Euro-Pacific Asset Management and a longtime advocate of sound money, emphasized that sharp pullbacks are normal in a bull market. He noted that such dips often shake out weak hands, creating fresh buying opportunities for long-term investors. Schiff also criticized the disconnect between claims of a strong economy and the pessimism felt by average Americans, arguing that gold's steady performance reflects deeper economic fragility masked by political rhetoric. As markets brace for further shifts, Schiff's outlook remains decidedly bullish, seeing every correction as a chance to accumulate hard assets before the next leg up. If you found this insight helpful, like, share, and subscribe for more updates on gold, silver, and global market trends.
A year ago was a great time to be buying gold and silver stocks, but I heard a lot of people talking about taking profits, selling. There was some worried people about the drop. Gold had almost hit 4,400, and they're talking about that big drop, and maybe it's going lower, which, of course, is what happens in a bull market. You get these violent sell-offs to scare people out. But the bottom line is gold's $4,000 an ounce. In fact, it closed the week almost right at $4,000 an ounce again. Yes, we haven't traded below 3,900. The lowest I've seen gold was in the lower 3,900s, 3,920, 3,930. And it's gotten above 4,000. I think it got to 4,020, 4,030 this week. It's been hanging out at that area. This is very similar to the way gold behaved when it first broke through 3,000. Yes, it wasn't a line in the sand where gold didn't go below 3,000, but it didn't go much below 3,000, and eventually it took off and then went above 4,000. I think we're doing the same thing now. I think we're forming a base right around 4,000, and before you know it, we'll be at 5,000. But meanwhile, a lot of investors aren't going to own gold for that ride because they're getting shaken out now because they're getting so nervous. Obviously, this is not the bubble that the media is portraying it to be. The bubble is in crypto. And the air, by the way, is coming out. Bitcoin got back below 100,000 today and this week. This is the first time since June that we've been below 100,000. Now, there was some buying. I think the entire crypto community is kind of circling the wagons here, trying to defend 100,000. And they were able to pop the market back up to around 104,000. But to me, this is a big bear market. I think once we really break maybe 98,000, 97, get some distance between Bitcoin and 100,000, it's just going to sink like a stone in what's supposedly, the best environment ever for crypto, with the entire Trump administration behind crypto. In fact, Donald Trump, when he was on 60 Minutes this week, and he basically said that the only thing he cares about is that the United States lead the world in crypto. I mean, that's his main concern, right? According to Donald Trump. I think gold is forming a nice base here at 4,000. Silver, it's not, at 50, but it ain't much below it. It's around $48 and change. I mean, it's holding pretty steady, very close to $50. It's not tanking back down to 40. So I think, again, this is another opportunity, just like when silver was around 30, and I was saying 30 is the new 20. 50 is really the new 30. I mean, yeah, you could buy it a little bit below, but for who knows how long. So buy yourself some physical gold and silver. The gold mining stocks, again, a lot of these stocks are now in bear markets. It is amazing how far off their highs most of these gold and silver mining stocks are, even though gold is almost 4,000, even though silver is almost 50. These stocks have lost almost all of their gains, since gold was, I think, 3,600, 3,700, since silver was 40. A lot of these stocks are back down to where they were when silver was 40, even though it's 50. And they're just so scared because, well, it was 54, so it's going down. So what? It was 54 for like a day. I mean, if you took that 1 week out, we'd be at the highs, right? I mean, where we are right now is, a month ago, this would be record highs for gold and silver a month ago. Yet there's so much bearishness among investors. And there's not nearly enough bearishness among crypto investors. They're completely complacent. They're happy as clip. They're not worried at all that Bitcoin is going down. They think it's on sale. Hey, it's $100,000. It's on sale. On sale, you're buying nothing and you're paying $100,000. The sale is on gold and silver. And where the sale is whatever you would buy if you just sold your Bitcoin up here. But people don't want to sell it so much that they're going to borrow against it, where they're going to sell it. It's just going to be sold out from under them at a much lower price than if they just sold it right now. So get your gold and silver, buy these mining stocks.
Recent economic indicators are revealing cracks beneath the surface of America's supposed financial strength. Despite political claims of a booming economy, new data paints a different picture. The latest University of Michigan Consumer Sentiment Index fell sharply to 50.3, down 6.2% from the previous month and nearly 30% lower than a year ago, signaling growing concern among consumers about inflation, debt, and purchasing power. Renowned economist Peter Schiff highlighted the disconnect between political optimism and economic reality. He noted that while leaders boast about having the strongest economy ever, real-world data contradicts that narrative. Schiff emphasized that declining consumer sentiment and slowing growth reflect deeper structural weaknesses masked by temporary market enthusiasm. As Schiff warns, ignoring these warning signs could leave investors unprepared for a broader economic correction already taking shape beneath the surface. Now, let's go back to the interview.
Meanwhile, if you look at what's been going on in the economy, right, the negatives are really coming to the surface, despite the fact, and again, Donald Trump on the 60 Minutes interview talked about how the U.S. economy is the strongest it's ever been, and it was the weakest it's ever been a year ago when Biden was president, and it went from the worst economy to the best economy, and it's the hottest economy in the world. And everybody agrees that it's the hottest economy in the world. They said the U.S. economy was dead last year, and now it's alive and thriving because Trump is president. Well, if you look at the actual economic data, it belies all of that bragging that's being done by Trump. We got the University of Michigan consumer sentiment numbers that just came out, and not only were they much lower than expected at 50.3, a 6.2% decline from the prior month. And it's about 30% lower than it was a year ago when, I guess when Trump first got elected. Now he's been president for about a year, although he hasn't been president for a year, but it was a year ago that he got elected. But this is the second lowest level for consumer confidence going back to 1978, second lowest. So according to Trump, we've got the greatest economy ever. Yet the people living in that great economy are almost as pessimistic as they've ever been about the economy. And the only time that consumers were this worried about the economy between now and 1978 was in June of 2022. And that was inflation when it had peaked, around 9%. It was at a 40-year high. And that's the last time consumers were as worried. Yet on that 60 Minutes interview, Donald Trump claimed that inflation is gone. He's killed inflation. There's no more inflation. He thinks it's lower than 2%, even though it's higher. So he's already claiming victory on destroying inflation. When one of the reasons that people are so pessimistic is prices are rising. That's one of the main reasons. And their outlook for prices is that they're going to continue to rise. And another reason that consumers are so pessimistic is because the job market is not looking good. In fact, earlier this week, it was just yesterday or Wednesday, we got the job cut number from Challenger. We would have got the official jobs numbers today, but we didn't get those because of the government shutdown. But we got these Challenger job cut numbers, and these are announced layoffs. And for the month, it was 153,074. That's a 183% increase from September and 175% higher than a year ago, October. These were the most job layoffs that we've had in an October since 2003. And it was led by layoffs in technology-related companies. And that was probably similar back then because we had, the bursting of the dot-com bubble. We had that recession. But it's technology jobs. So these are probably high-paying jobs that are getting axed. And so the worst since 2003, but it's the worst or the highest number of announced layoffs in any month in the fourth quarter, right, which would be October, November, or December. The highest since 2008, which was, of course, the financial crisis. So, this is telling you, if we haven't had companies laying people off at this rate since we were in the middle of the financial crisis, not even the middle, like the depths, the fourth quarter of 2008, that was it. It started in the summer. So companies were in a lot of trouble. The economy was in bad shape. We were deep in the Great Recession, right? The worst recession since the Depression. And now we have the same amount of layoffs as we did then. Companies are that worried. They're cutting back and they're downsizing. And Trump is out there, going around the world, telling everybody how great our economy is. This is the reality, right? Economic reality flies in the face of this fantasy that, I don't know, maybe Trump believes it, maybe he doesn't. I have no idea. But this is what he's saying. But it's got to be very frustrating to the people to hear all this nonsense and then compare it to their own experience.
In conclusion, Peter Schiff's analysis once again underscores the widening gap between perception and reality in today's economy. While markets may rally and headlines promote optimism, the underlying fundamentals tell a more sobering story. Rising costs, weakening sentiment, and policy-driven distortions that can't last forever. Schiff reminds investors that the real strength lies not in political rhetoric, but in tangible value, and gold and silver continue to represent that time-tested store of stability. As global uncertainty intensifies, these insights become increasingly vital for anyone seeking to preserve wealth in turbulent times. Schiff's message remains clear. Understand the cycles, prepare for volatility, and don't be misled by temporary gains. For those who value economic truth over political comfort, his warnings serve as both caution and guidance. If you appreciate this perspective, like, share, and subscribe for more insights into gold, markets, and the global economy ahead.